Hi there, welcome to Kneppy Invest. By far, the most powerful type of announcement a company can release is a profit upgrade. Because what a profit upgrade tells us is the company is performing better than the management expectations. And this can be, not always, but can be the catalyst for a long-term re-rating in a company's share price. I have seen a company move into an uptrend with positive sentiment, and that could last for a few years, particularly if the company keeps on releasing profit upgrades. But it doesn't always happen. But historically, it happens for most companies that do release a profit upgrade. Now, right where we are in the financial year for most Australian-based companies listed on the ASX, we're not seeing a lot of profit upgrades because we're at the start of the financial year. And already companies have released their expectations for financial year 23, and we're just not far enough into the financial year for management to have a good idea on how the company is performing compared to their expectations. So I don't expect to see any earnings or profit upgrades for a while for those companies who finished their financial year at the end of June, just in the first few months of financial year 23. Now, in saying that, not all companies have the same financial year on the ASX. There are some companies just about to finish their financial year, including Gentrak. And typically, the most usual time to see a profit upgrade is towards the end of the financial year, when management have a much better idea on how the company is performing compared to expectations. And in fact, Gentrak did release an earnings or profit upgrade on September 29 in relation to revenue and EBITDA being higher than expected. Now, a few facts in regards to Gentrak. This is a software solution for utility companies. So we're talking about energy utilities, water companies, and airports, mainly in Australia, New Zealand, and the UK. Company was founded in 1989 and listed on the ASX in June 2014. Current CEO is Gary Miles. He got into that role in October 2020. And the biggest shareholder is Australian Ethical Investments. They have a 15% holding in this company. Seems like that holding, or that percentage holding, has been increasing. So it looks like they're adding to their holding in Gentrak. So they are confident about the future of this company. And the current market cap, after a bit of a re-rating of the share price on September 29, is $134 million. That's at a share price of $1.34. Share price did increase about 14% on September 29. And the ticker for this company is GTK. Now to the financial history for Gentrak going back to 2012. So about 10 years of history here. Looking at total revenue, income, which is profit, cash flow from operations, and gross margins. So the first thing you want to see when you're researching a company is revenue growing consistently through time. And Gentrak probably won't say it was a darling of the ASX back in 2017 and 18, but it was highly favored because the market loved this company for a period of time. And that love generated an increase in interest in this company, driving up the valuation of Gentrak to $650 million. Share price reached a high of about $7. And one of the reasons behind that increasing interest in Gentrak was the increasing in revenue during 2017 into 2019. In fact, revenue doubled from 2016, 52.7 million to 111.7 million in 2019. We also should mention that this company is profitable and cash flow positive. In fact, in 2018, this company was profitable by 13.9 million and operating cash flow positive by 22.2 million. The probably big negative thing about the period between 2012 and 2019, when revenue was increasing, was that gross margins was dropping. I would have preferred to see gross margins increasing, or at least staying a little bit steady. So that was a one big negative thing I found about Gentrak back in 2018. And then all of a sudden, revenue stopped growing. In fact, revenue has just gone sideways. Not only that, margins, well, gross margins kept on falling. So we saw profit and operating cash flow hurt by that as well. And in 2021, the company had $105.7 million of revenue, only $12.9 million in operating cash flow, and was only profitable to the tune of $3.2 million. So what we need to see, and what Gentrak management have to show, is this company has returned to growth in their revenue. And I'd also like to see the margins of this company increase over the next few years. And if that does happen, I think the market will become interested in this company again, and that interest will drive up the share price. I say the blue sky limit for this company is well above $700 million in valuation, but that might take a few years and a significant change in sentiment for this company. It's because right now, a lot of negative sentiment in this company because of what's been happening over the past 3 or 4 years. Usually I will show you a long-term chart, but instead of showing you the long-term share price chart, this is actually the market cap history of Gentrak going back to 2015. I've already mentioned that there was a lot of hype in this company between about 2017 and 2019, and that hype really started in 2016. In fact, if you go back to 2015-16, the market cap of this company was hovering around about 150 million, and then it was probably about a five-bagger between 2016 and 2019. The top in this company, in terms of valuation of the share price, was in the towards the end of 2018, when the valuation of this company reached 650 million and the share price reached a high of $7. However, the dark times for this company began just before COVID-19. You actually can see the market cap drop leading into COVID-19 into February, March 2020. In fact, the market cap of this company dropped from about 500 million to 200 million before the downturn in the market. And during COVID-19, the valuation of Gentrak actually reached a low of about 75 million. But you can see the market cap over the past 2.5 years, since March 2020, has really gone sideways. There's been no significant sell-off in the company share price, no significant increase in the share price. So sort of a consolidation period over the past 2.5 years. The only time I thought we might see a breakout was when the company did release another earnings or profit upgrade in September 2021. But that earnings and profit upgrade, well, that breakout or potential breakout actually failed. So not all earnings or profit upgrades are the catalyst for re-rating in a company's share price. And we saw that with Gentrak last year. Now on to Gentrak's profit upgrade, my favorite sort of announcement. And the whole reason I'm doing this video is because we're not seeing many of these sort of upgrades right now. Released on September 2022, I saw the title of this announcement. Gentrak provides updated guidance for financial year 22. And to be honest with you, I thought this would be a downgrade, not an upgrade, because they have a lot of energy utilities. And I thought maybe because a lot of energy utility companies are going kaput in Europe, I thought maybe that would be a sign, or that would be sort of a harbinger for this company doing or performing worse than expected. However, it was complete opposite. So this company's previous guidance, released on 24th of February and then again on 24th of May 2022, was for revenue to be about 105.7 million and EBITDA to be in the low single digits. The up-guided guidance is for revenue to be around 115 million and now EBITDA to be in the mid to high single digits. And of course, the market did like this. Initially, no, there was no action on the market. It took about an hour before we saw the first trade. And again, actually not again, I haven't mentioned this at all yet. Gentrak is liquidly traded. So sometimes you will not see shares trade in this company for a little bit of time. So keep that in mind if you are thinking or want to do further research on this company. Now to the daily chart for Gentrak. This is the 18-month chart for Gentrak. And when you look at this, taking the whole picture, nothing much has happened for Gentrak over the past 18 months. In fact, the share price is lower than it was 18 months ago. And in fact, the share price is in right now, even after the market reaction after this announcement, this profit upgrade, the share price is still in a downtrend. This is not a breakout in the share price. The share price is not at a 6-month high. Share price is not at a higher high. We haven't seen a higher low. And in fact, the market could completely forget this profit upgrade in the next few weeks, and the share price of Gentrak could continue in this downtrend. It could move towards $1, even below $1 over the next few months, particularly if there's this overall negative sentiment in the market continues. And that's why I think this is not a breakout in the share price. Share price could fall further from here just because of the negative sentiment in this company at this point in time. I'll need to see share price continue to go higher from here. I'd like to see some higher volume coming in. The other thing to notice here, The last time the company did release a profit upgrade in September 21, that was not a breakout either. In fact, leading up to that profit upgrade, the share price fell from about $1.95 to $1.44 in 8 trading days. I'm not sure what caused that massive amount of selling. There must have been something, and I thought you would be thinking that any shareholders would have been thinking that the market was seeing something that they weren't seeing, and instead of a profit upgrade, there would have been a profit downgrade. But the company released a profit upgrade. Share price increased something of like 25% on the back of that profit upgrade in September 21, but that was not the catalyst for re-rating in the share price. And really, the share price is struggling over the past 18 months, has really struggled to get above $2.07. That's a really strong resistance level for Gentrak moving forward. So at this point in time, I do like this profit upgrade in terms of the numbers they gave us. But when you look at the chart, and simply because Gentrak is a lower quality company, I need to see a shift in the trend in the share price. I need to see a shift in sentiment for this company. And right now, we're not seeing that. I want to see some further proof that this company is turning things around in terms of their company. And if they do show that further proof, that could be the catalyst for re-rating in Gentrak's share price. That's all I have for this video, looking at Gentrak's profit upgrade released on September 29. The numbers look pretty good. So whenever a company does release a profit upgrade, the company is performing better than expectations of the management. So that must be a good thing. Share price for Gentrak did increase 14% on the back of this. Now, overall, the market was up 1.5%. So that had something to do with the share price increasing 14%. But the major reason why the share price did increase by that much was because of the profit upgrade. But unfortunately, this is not this announcement has not led to a breakout in the share price, because the share price is still in a long, well, maybe not a long term, we'll say a medium-term downtrend. It has been going down for the last 8 to 9 months, generally, most likely because of overall negative sentiment in the market. So hopefully that negative sentiment starts to turn around. Hopefully Gentrak can release some more positive news, and hopefully that will lead to a shift in sentiment and a change in the trend in Gentrak's share price. If you have any thoughts, any comments, any questions, leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.